dots that actually can't be joined.
Question number 2, John Hayes.
Thank you, Mr Speaker. My question is to the Minister of Finance. What measures has the government taken to improve the long-term competitiveness of the New Zealand economy?
The Honourable Bill English.
Speaker, the government has taken a number of measures, including reforming the tax system to reduce tax on work, savings and companies, and increase tax on consumption and property speculation, improving regulations and reducing unnecessary costs on business, and progressing our business growth measures that focus on exports, innovation, skills, infrastructure, capital markets and the use of natural resources. And last week I signed a new policy targets agreement which sets out specific targets for price stability, helping to create a stable macroeconomic environment suitable for growth.
John Hayes.
Thank you, Mr Speaker. What are the main features of the new policy targets agreement which will contribute to a more competitive economy?
The Honourable Bill English.
Mr Speaker, the agreement continues to require the Reserve Bank to keep CPI inflation between 1% to 3% on average over the medium term. Within this target, the new agreement now requires the bank to focus on keeping future average inflation near the 2% midpoint. In addition, the policy targets agreement includes a stronger focus on financial stability by including asset prices in the range of indicators that the bank monitors. As with previous agreements, it requires the Reserve Bank to seek to avoid unnecessary instability in output, interest rates and the exchange rate.
John Hayes.
Thank you, Mr Speaker. What lessons are there for New Zealand from international attempts to intervene in currency markets in the hope of creating more competitive economic conditions?
The Honourable Bill English.
Mr Speaker, Reserve Bank paper published earlier this year looks at interventions by the Bank of Japan and the Swiss National Bank and their relevance to New Zealand. It notes that economic conditions are quite different in New Zealand than in Japan and Switzerland. Both of them have experienced deflation recently, partly due to their strong currency appreciation. New Zealand has not. New Zealand has in fact experienced an increase in its terms of trade, contributing to upwards pressure on the exchange rate. Mr Speaker, Switzerland and Japan have been forced to attempt to lower their currencies in order to ease monetary conditions. In New Zealand, we could just lower interest rates if we want to ease monetary conditions.
John Hayes.
What specific lessons can New Zealand draw from the results of currency market interventions by Switzerland and Japan?
The Honourable Bill English.
Mr Speaker, the Reserve Bank paper confirms that the currency market interventions are both expensive and they do not have a lasting impact. They note that currency interventions since 2008 have largely resulted in financial losses for the Swiss National Bank and the Bank of Japan, and they have been ineffective in lowering their currency. Since the beginning of 2008, despite the efforts of the Swiss Bank to keep their currency down, it has actually appreciated 27% against the euro and 15% against the US dollar. And in Japan, the yen has appreciated 29% against the US dollar and 37% against the euro.
The Honourable David Parker.
Which of the following measures is the best indicator of the competitiveness of the New Zealand economy? 53,000 people a year leaving for Australia, large job losses for exporters and local manufacturers competing against imports, or an overvalued exchange rate leading to increases in New Zealand's net international liabilities?
The Honourable Bill English.
Well, Mr Speaker, there's any number of ways of measuring competitiveness, but in the long run it will be the profitability of our export sector. That was damaged pretty severely in the first decade of this century, and we are working hard to restore it. Unfortunately, it is taking some time, and there are some international headwinds, such as, for instance, the large drop in coal prices recently that have hit Solid Energy.
Question number 3, the Right Honourable Winston Peters.
Mr Speaker, this question is to the Prime Minister.